Good morning. I'm Carol Harmer, and this morning I'm going to talk to you about the dollar Swiss. You can see here that the dollar bounced off this trend line. Well, at the moment it's a support line, but it could become a trend line. We haven't made any particular moves to the top side that I'm excited about, to be fair. And there doesn't seem to be any reason that we can break out of this range. Now, normally with trends, you have a long-term trend that builds over 6 months. Now, I always look at the weeklies and the monthly charts, and I can assure you the long-term trend, which I'm going to show you, is down. Hard to believe. Now we're looking at dollar Swiss trading at 0.79. We've come from 4.11. So, I mean, I'm going back years, but still years where I was around. So there's been a weakening of the dollar for the last 50 years. That said, I know most of you want to know what's going to happen today. So look at these moving averages. You've got the 9 and the 18 coming in at 79.41 and 79.67. We're trading at the moment at 79.46. We need to break above those moving averages to stay within the band. You can quite clearly see this sideways movement. If we can't break above the 55-day moving average, then the market is going to come under pressure yet again down to this particular area, which at the moment today is coming in at 78.80. The reason why the dollar is weak is just it's not a reserve currency anymore so much, and it hasn't played by the rules, really, the dollar, since 2020. But you're in the middle at the moment of this sideways band, which isn't very good. So you need to play the range, and you need to use the moving averages to be able to play that range. So it's already touched one of them. We've got the high of 79.65. We've already kissed that 79.60 moving average. And as I say, if you take this area as the midpoint, use your pivot point analysis as well, because that will give you the swing level for today. If you use pivot points, we've been through pivot points and you can see how important they are. Now what I'm going to do is I'm going to show you a weekly and a monthly chart, just so that you can see what I'm looking at. Even from the weekly chart, you can see that this is a sideways continuation pattern. And what we will be looking at in this sideways continuation pattern is for the market not to break above 81.30, 81.50, that sort of area. That keeps the market within the sideways trading pattern. And I mean, you can see it quite clearly from these weekly charts. When we take out the lows, which is going to be here, the downside should be, you measure, see the double top on the weekly, you measure to get the longer term perspective, the pole, we call it the pole, or, so we're looking at down here somewhere, 69, 66, or you measure the top to the bottom of this consolidation phase. And that will give you a measured target of just eyeballing that down towards 7,500. I like looking at charts, so I'm going to show you something else. This puts the dollar into perspective. You can see where it's come down from 40 and it's just down, down, up a bit, down. If you look, you can't trade off monthly charts, absolutely agree, but it's always nice to know where the market is, where the market's going. So for the foreseeable, you've seen where it's come from, you see where it's gone down to, you can see the range, okay? Already this morning we have rejected the higher levels that we've been trading at. This was just a rebound from this area. If you look at the indicators on the daily chart, you can see really clearly that the market is in the middle, still looking bearish, these indicators. Okay, so I think for the moment, it's sell rallies up to these higher levels, and I'm not going to say hope for the best because that's not how we trade. You sell rallies up to those higher levels, and it is only above these moving averages. So you could place your stop loss above 79.80. All right. We'll never put a monetary stop loss in. You always put a stop loss in where the resistance is, but you go above it. Okay. No point doing it at 79.80 because the world and his dog is going to want to break it. So you put your stop loss above there so that you don't get taken out by these little algos or high tickers that are evident in our market today. Good luck. I will be doing some more charts in a bit.